This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, December 11th, 2014. So the euro manages to extend its gains up towards the 50-day moving average, which has done a good job of capping the downtrend over the past several months. The 50-day moving average comes in at 125.50, and only a close above this indicator would force a shift in the current downtrend. Inability to take out the 50-day moving average will put the pressure back on the downside for a retest of the recent low at 122.48, and then a move lower towards a fresh downside extension to the 2012 base at 120.40. Sterling dollar. Cable continues to consolidate just off recent lows at 155.41. A break below 155.41 would open the door for a move down towards the critical psychological barrier at 150, and in the interim, only a break back above 158.25 would take the immediate pressure off the downside. Dollar yen. Dollar yen has recently broken back down below the 10-day moving average, with the close below on Wednesday being the first close below the 10-day moving average since mid-October. This sets the stage for a more significant correction, potentially back towards the 1550 area, which represents the 38.2 fib retracement off of the October 15th to December 8th low-high move. Euro Swiss. Euro Swiss is attempting to recover, but will need to break back above 20.45, the previous 2014 low from September, to take the immediate pressure off the downside and the focus away from a test of that psychological barrier at 120. Aussie dollar. Aussie dollar is attempting to correct a little bit following a break to fresh 2014 lows, trading down to 82.23, 82.24 on the 9th of December. But the market should remain very well capped into rallies with the downtrend intact and a break back below that recent 2014 low, exposing a test of the next key psychological barrier to the downside at 80. Dollar CAD. Dollar CAD is in the process of consolidating recent gains by fresh yearly highs, with the break back above the 1467 previous 2014 high, setting the stage for the next major upside extension towards a measured move objective at 117.50 further up. Ultimately, only back below 113.13, the low from the 1st of December, would compromise the current bullish outlook. Kiwi dollar. Kiwi is locked within a consolidation, but has recently broken to fresh 2014 lows at 76.09. The market should continue to be very well capped in light of that breakdown below 76.60 to fresh 2014 lows, with only a break back above 80.35 to compromise the bearish outlook. Below the recent low that we had seen at 76.09 will expose a measured move objective to 72.85 further down, which guards against the psychological barrier at 70. SPX 500. The S&P 500 has triggered a double top this week and has now basically met the measured move objective of that formation at 2020, stalling just shy though at 2023. But the downside pressure now is intact, and we could see deeper setbacks as a more medium-term correction plays out towards next key support, which comes in at 2002 or 2002, the low from the 4th of November. A close back above the previous neckline at 2049 would be required now to put the pressure back on the top side. Gold. Gold remains locked within a broader underlying downtrend, but there is some key resistance at 1256 which could be tested in the coming sessions. A break above 1256 would be a significant development and would force a shift in the structure and take the immediate pressure off the downside. But inability to take out 1256 will keep the market focused on the downside, with a potential lower top carving in favor of the next downside extension back towards and maybe below the recent range lows at 1131. That's all for today.